Our next topic is on the general ledger. The ledger is a collection of all accounts and their balances. This is different from the journal because the ledger lists each account individually. The journal lists every transaction in order, but let's say I want to know how much customers owe me, the accounts receivable account. It would be really difficult to look through the whole journal and add all the accounts receivable transactions together. It would be time consuming and maybe near impossible if there are thousands of transactions. The ledger will have the accounts receivable account and all the transactions that affected that account with the final balance. The chart of accounts is an easy concept. It is a list of all accounts that the business is using. I always say to think of the chart of accounts like a table of contents that you would find in front of a book. This way, when making an entry, you can look through the different accounts you have to find the appropriate one. We had one bookkeeper send us their books before, and they had an account called salaries expense. Then another one called salaries expense in all caps, and another one called salaries and wages expense. It was all the same account, but they just kept making new ones instead of looking through their chart of accounts. We had to combine all the accounts together into just one account. The chart of accounts is related to the ledger because all these accounts will have a ledger account and balance. For instance, cash is account number 101. I would go to the ledger to find account 101, cash, if I wanted to know the balance. It does go in order where assets go first, then liabilities, then the equity accounts, including the revenues and expenses. Usually, the first digit lets you know the type of account. These account numbers can vary and do not have to be the same for every business. However, they usually follow a similar order. I have seen very large companies start at 1001 for cash instead of 101. Now, while I have the chart of accounts shown, I do want to go over two accounts that I have not previously covered with you. I normally like to wait until chapter 3 to cover these accounts, but you might see them in your assignment. The first one is prepaid expenses. Here we have prepaid insurance. I want you to be aware that this is an asset account. It is like paying for your insurance 6 months in advance. It is an asset because it's a resource that you have not used yet and is still worth something. In chapter 3, we learn what to do when the time passes and it expires. It does not have to only be insurance, though. Businesses can prepay for rent and other expenses as well. The second account I want to bring to your attention is unearned revenue accounts. Even though it has the word revenue in the account name, it is actually a liability account. This is when the business is paid cash in advance. The business receives cash but has not completed the sale yet. The business still owes the service to the customer and is in debt to the customer until the work is complete. We will learn more about this account next chapter. As I stated on the last slide, the ledger will maintain the account balance of each account. Each account is listed separately, so they are not all mixed together. Let's take a look at what the ledger looks like. This is an example of a cash ledger account. We have the account name at the top, along with the account number of 101. The first column would be the date of the transaction. The second column would be the explanation. Please note, in my courses, I do not require students to write in explanations in the journal, so you would not need to put it here either. For my course, you can leave it blank, but in the real world, you can write in explanations. Usually, I don't see too many explanations unless the bookkeeper wants to put in a note such as a reference to another transaction. Next, we have the debit and credit column. Here you are just copying the transaction from the journal. The last set of columns would be the balance in the account after the transaction was made. This is exactly like looking at your bank account. When I look at my bank account, I can see all transactions that I made, whether my bank account is increasing or decreasing in cash, and then what my final balance in that account is. Now, I do something a little different than what you might see in the textbook and in the real world. I have a debit and credit column here. Normally, it's only one column, the normal balance of that account. Since cash is an asset and assets have debit balances, then the balance column should only be a debit. Otherwise, it would be negative if it was on the credit side. I keep both columns so that you, the student, can specifically let me know what the normal balance is. It's just a way to learn the sides even more. This may seem a little confusing, but we will do the practice problem next. And by the time we are done, students usually have a very good understanding of this topic. Also, in the real world, when using QuickBooks or other software, it will automatically post the ledger for you. But it's always better to understand how this works by learning a manual system. Also, when you transfer the entries from the journal to the ledger, we call this posting. We post to the ledger.